Good morning. My name is Paulo Vieira da Cunha. I'm a director at the Brazilian American Chamber of Commerce in New York. And it's really our pleasure today to tackle one of the most promising elements in the Brazilian policy landscape. Whenever we talk about Brazil, we inevitably talk about the fiscal side. And it's a disaster. It's a catastrophe waiting to happen. And the silver lining in this whole discussion is this tax reform that has been approved after many, many years of discussion. So it's really a great pleasure to have with us today two top-notch experts to discuss this subject, which is so promising in terms of the Brazilian economic outlook. You have their bios in the distribution, so I will not repeat them here for the sake of saving some time. They will make use, Bruno will make use of a presentation, which will be made available to you afterwards. And Kieran also has shared with us some additional material that will also be available for you. So there's plenty of things for you to study after the webinar, but I'm sure we will all learn a great deal in the next few minutes. So thank you and welcome, Kieran. Welcome, Bruno.
Thank you very much, Paul. Thank you very much for the invitation to talk on this issue that's so close to I think to the hearts of everyone in Brazil. And I guess we're looking at the future optimistically in terms of the impact. Maybe it's just worthwhile, maybe just a short reflection on some of the other major changes that have happened, as well as what we're going to focus on, which is the indirect taxes. We've also seen in Brazil in recent years the change for transfer pricing, where Brazil's following OECD rules. We've also seen the implementation of Pillar 2, minimum global taxes. So, and also discussion now about income tax reform, which is which is being discussed. But I think I guess the biggest change probably that in recent decades is the indirect tax reform that Bruno is going to go over with us now. I think over to you, Bruno.
Thank you, Kieran. Hello everyone with us this morning. Thank you, Paulo, for the invitation, and the Brazilian American Chamber of Commerce as well, and the team for putting this together. Definitely, I mean, when we chose let's say the main theme for this event, we call it Unleashing Value and New Investments, and that's a positive message. I believe that, of course, the fiscal situation in Brazil is a little dire. We are suffering with very high interest rates currently, but this tax reform, as Kieran and Paulo mentioned, we look at it in a positive way after, of course, the transition happens. So the idea up front now is to share a few slides just to give some background on what it is. And then we're going to have a debate and talk about some very interesting business-related, investment-related topics and some impacts that we are seeing already with companies already happening, and the major impacts that we're going to see here happening over the next years as the transition happens.
Yeah, and maybe if I could just add, Bruno, if we have a Q&A, so if you've questions, maybe if you want to put them into the Q&A, and except obviously for any burning questions you have, just let us know, and we'll try to clarify anything that's not obvious in the slides here.
Perfect, Kieran. So, I mean, this is what the tax reform is. Brazil historically has had around 5 VAT taxes, federal, state, municipal, and it's a setup that we don't see anywhere else. I mean, I think India used to have something similar. They went through a major tax reform years back, that introduced something very similar to what Brazil is trying to do now, is going to do now, with this dual VAT system. We're migrating from 5 taxes, which are convoluted in the way that they work. The tax base of these taxes is not what we see in other countries, which is the net price. In Brazil, there is a historical problem on even the composition of the tax base has been a problem on tax, on top of tax, on how it's calculated. And that also gives rise, for example, to something that's not very common in other countries, which is the fact that these VAT taxes, they actually go through the P&L. The P&L in Brazil, the income statement, we will start with gross revenue, then you're going to deduct taxes. And we have a situation in Brazil, for example, with tax incentives, which are a major part of the current setup of VAT taxes, which we actually have like VAT tax incentive revenue alongside the EBITDA and everything. And this historically has been a very important component for businesses in Brazil and for price setting. So the current setup with these 5 taxes, PIS, Cofins, 2 federal VAT taxes, very confusing. They are responsible for major numbers of both in quantity of litigation cases and also amounts in Brazil. We have 1 GDP of Brazil in tax litigation cases, around 5-6 trillion reais currently, in thousands and thousands of cases currently being litigated in courts. PIS and Cofins is a major source of those issues, specifically on how it's calculated, the tax base, and also on how to calculate credits and inputs on those 2 taxes. ICMS is the state VAT. This is the one that makes companies go all around Brazil looking for tax incentives, setting up shop, setting up distribution centers in many states, and of course putting a lot of cost in their income statement to operate like that. But of course, seeking to have VAT tax incentives, which currently are major sources of, let's say, competitive advantages, sources of income and profitability, and they are responsible in the bottom line to help set up, let's say, pricing in the end. Okay, so the ICMS VAT is the state one, also major source of contingencies and issues, and it also has a major issue in some states, which is the fact that there is a lot of accumulation of ICMS credits, and state governments, they usually don't give the money back. They don't refund it as quickly as possible. ISS is the municipal service tax. Historically, it also has some conflicts with ICMS on how it applies, on what it applies. Telecom services, ICMS and ISS, they have been fighting for taxpayers in that arena for years. So, and of course, major source of problems is that when you have the same supply chain of a sector, for example, let's say the healthcare sector, where we have companies that manufacture products, materials, equipments, and then we have hospitals and others that provide services that are subject to ISS. They are within the same sector, the same supply chain, but when you have ICMS and ISS together in that supply chain, they're not creditable. They don't talk to each other. So that's a major source of leakage. That's a major source of incremental tax cost that is not seen in the day-to-day, but is there. Is there, making prices higher, making the economy less efficient. So that's another problem of our current setup with 5 taxes. And then we have the IPI, which is that federal tax on manufacturing, industrialization, which is also what actually one of the major items that helps, for example, the free trade zone of Manaus stand as a manufacturing place for Brazil as an option. The idea is to take all this setup that was built over the last 50 years and convert that into a very simple dual VAT system, which will be very similar to how VATs should work and how VATs work everywhere in the world, okay?
Yep.
And like Kira mentioned, TP, we converged to OECD. We are implementing Pillar 2 under global concepts. And now our VAT ideally is going to migrate from this very convoluted system to a dual VAT system.
Yeah, and Bruno, maybe just to emphasize this point in terms of the current system. I mean, currently tax compliance in Brazil takes multiple times the global average in terms of hours of time for companies to just to meet the compliance requirements. And it was actually, whenever you talk about contingencies, you know, I've had various meetings with people from the US and in discussing about companies that have been here in Brazil for some time, and they all, you know, they all are alarmed by the level of contingencies that are not on the books. I remember one case, you know, and when I say like major contingencies not on the books, like I remember what I remember one colleague commenting that he couldn't believe that there was only 10% of the potential liabilities on the books. And I remember seeing another case recently whereby it was like just 1% of the liabilities were on the books, and the rest were possible contingencies that were disclosed. So it creates a lot of the current system, you know, it creates a lot of time, a lot of effort, and there's a lot of risk associated with it, which is not good for business, and it's not good for investors, and it's not good for the companies. So that's, you know, the current system has been hurting business for many decades.
Perfect, here, and that's the point of our discussion today, is really to bring, of course, the current situation and the status of what we have, but bring also a positive message. Just yesterday, I was contacted by multiple people, because one of a major tech or streaming company in the US, they published their quarterly financial statements, and a tax litigation and tax infraction in Brazil was a major item that they put forward in the US in their financial statements, mentioning and giving rise to laws of profitability, and a lot of people are debating about that specific topic. So, like you said, major source of uncertainty, and the numbers are significant. But again, the idea here is, let's migrate, let's deconstruct this major setup of 5 VAT taxes that was built over the years by states, federal, courts, you know, litigate. All that setup should be simplified to a dual VAT system. Taxation will be based on the destination. No more ICMS and ISS uncertainty. Sectors will see a flow of supply chain in a better way. No more ICMS ST, which is the prepayment of ICMS ST. And most importantly, tax base will be the net price like it is everywhere else. And these taxes, from an accounting perspective, Kira, I know you also look into that very carefully, but from an accounting perspective, Brazil should also migrate to global standards and to something where these taxes won't be causing revenues and expenses and major P&L impacts to financial statements in the future. That's very important, let's say, for forecasting, for financial planning, and so forth. The thing here is, we are looking at a potential rate. It's not set yet, but the potential rate should be something around 26, 27, 28% of these two VATs combined. That's also a record rate. But again, this current setup represents about 51, 52% of the overall tax collections in Brazil. They come from these 5 taxes. So for the governments, collection from VAT taxes is extremely important. and that's why the rate to keep things even will be something like 27, 28%. Going to the next slide, for this whole setup to change, Brazil has structured let's say, a long transition. It won't be like, let's say, India. India, they gave some years for their tax reform to kick in, but when it kicked in, it was fully implemented up front. Brazil is implementing this in phases, okay? And a spoiler here already, Kieran, on our discussion, for financial planning, when you do a financial model for a new investment, every year from 2026, 2027 forward, every year is a different battle in terms of rates, in terms of taxes that will be extinct, taxes that will kick in and be rolled in. So very quickly here, 25, the new rules are coming forward. Companies are starting to adjust and to get ready for system implementation that will be required in 26. 26, the only thing that's going to happen, no new taxes to be paid, no changes in current taxes. What will be required in 26 is to put a very small rate of IBS and CBS, these two VAT taxes, in the tax invoice for statistical purposes only. Companies won't have to pay them. They will have to include them for statistical purposes only. A lot of companies, they're doing systems change currently to be ready, because in January 1st, if they don't add that information in the tax invoice, they won't be able to issue invoices in Brazil. And their business will be halted, unfortunately. So the battle for 26 starts in January 1st, and it's all about technology. It's all about putting, for statistical purposes, those very small rates in the tax invoice so the government can kind of understand how much collection they will have. They're trying to gauge here what's the potential collection for these two taxes. 27, PIS and Cofins, they will be extinct, okay? IPI as well. This is a major change. One of the major milestones is the extinction of PIS and Cofins, okay? And this will be replaced by CBS. One of the dual VAT systems will kick in 27. So 27, 28, no more PIS and Cofins, no more IPI, CBS kicks in. You will start having the coexistence of two tax systems. You have the CBS, but you still have ICMS and ISS. ICMS and ISS, they will start rolling out in 29 until 2032. So 4 years of rollout of ICMS and ISS. ICMS and ISS will gradually be reduced, while IBS will be gradually increased, okay? So like I said, every year is a different battle, lots of complexity during transition. We can discuss it later. But the idea, again, the end game in 33, January 1st, 2033, is for Brazil to adopt a full dual VAT system, resembling VATs like any other country in the world, and we will leave behind all this track record of problems, complexities, etc.
Yeah, and Bruno, if you don't mind, I'd just like to point out a couple of points here, just to reinforce them. One is that there's currently a huge focus on this requirement for January 2026 and the requirement for invoicing that you mentioned here, that they have to change the invoicing and in order not to pay the taxes. And the other thing is that it's implicit in this slide is that there's actually three different systems, 3 different moments in time, and 3 different, if you like, new system implementations. One's the 26, the invoicing. The other's the 27 for the transition, and then in 29, like 29, 32 for the new system. So so it's broken into 3 different moments and 3 different, I guess, 3 different system implementations that are implicitly part of this transition.
Great point, Kieran. So for example, for a company already operating in Brazil, definitely they will go through those three, let's say, major milestones in adapting their business to operate with these new rules. This will have major impacts to pricing, to profitability. We have seen sectors that will be more profitable out of the reform. Okay, they will be more profitable. We have seen sectors that currently work in structures where the VAT tax incentives that they have are a major source of their profitability. They have historically reduced prices or competed in prices in stores, right? On the shelves of stores against their competitors by using the system to generate VAT tax incentives that comprise their profitability and that will no longer be there. So what's going to happen to them, right? So those three milestones are very important for companies already operating. For new investors, we have also been helping companies, for example, companies that are coming into Brazil that market entry or looking into a concession with the government. When they do financial planning, when they do the modeling, 10 years, 30 years, whatever, if you do 10 years, you need to factor in that PIS and Cofins will be out of the picture in 27. You need to factor in that ISS, ICMS will be out of the picture in 29, 31, 32. And to really model that out precisely and how it's going to work, it's extremely complex. But again, looking forward after 33, it's a much simpler scenario to forecast and to model. Okay, so we expect that simplicity to come, unfortunately, only in 32, 33. But the change is going to be beneficial for many, many sectors, especially manufacturing. Manufacturing will see a reduction in effective taxation from a VAT perspective, whereas services in general will see some increases in taxation because they will bump up from a effective 14, 15% to something like 26, 27, 28, right? But moving forward to the next, okay, Kieran, you want to say something?
Yeah, just on this point, whenever you mentioned tax incentives, and I'm involved in a number of nonprofit organizations and charities, and a lot of them have tax exemptions. And of course, the tax exemptions and all of the documentation that they have are for the current taxes. So there's also, even for those that are exempt from taxes, there's a concern because the exemptions that they have are for the current taxes, and now they're going to change to a new tax system. So all of this transition and what benefits they're going to have under the new system is also, for charities and not for profits. They're looking at this closely as well.
Definitely. And one of the good points about the system is there is a lot, the current system, the current setup has a lot of leakage and accumulation of taxes in the chain, in the cumulative way that ISS, ICMS work, the disconnection between a company that pays ICMS with another that pays ISS in the same supply chain. Those issues, in theory, go away because ideally the dual VAT system will have a very seamless flow in the sense that what is paid in the previous transaction is creditable in the next. And if you accumulate credits, the government is saying that, in 30 days, 60 days, 90 days, that time period is still to be determined. But they are saying a refund will happen for businesses that accumulate credits, which is something that we do not see today. What we see today is a huge amount of PIS and Cofins credits, ICMS credits, sitting in balance sheets of companies in Brazil, subject to impairment, subject to discussions, right, Kieran, all the time, whether they will be recoverable or not. And that's a major problem with the current setup that should not exist with the next one, with the next system, that will be seamless, that will allow for refunds very quickly. And for the charity entities, today, whatever they consume from suppliers, there is leakage. There is a lot of tax that come with what they buy, what they procure from third parties. In theory, with this new system, everything that will flow to them in theory, they should not carry that impact of that tax. It's going to be much simpler and easier to identify the tax impacts with the new system compared to the current one, right? Yeah, so moving forward, one more slide, which is very graphic. It kind of depicts this transition in a balance between this is very good, let's say, for manufacturing that operate with logistics, because today, as we mentioned, the current setup today is, and we helped a company do a market entry in Brazil recently, and São Paulo state, for example, they have ICMS ST. ICMS ST is a dreadful mechanism of prepayment of tax. Okay, it helps, it reduces auditing efforts, it helps collections, but if the product that's prepaid in São Paulo leaves the state of São Paulo and gets to be distributed or sold elsewhere in another state, companies, they have the right to get that refund back, and that refund doesn't come quickly, okay? So São Paulo has historically lost, let's say, investments in distribution and manufacturing due to things like this for specific sectors, whereas adjacent states, Minas Gerais, Espírito Santo, Santa Catarina, they have gained ground, Goiás, they have gained ground on the distribution tax incentives. They don't have ICMS ST, the prepayment, and all those complexities, they have created a mindset. And that's the other thing, Kieran. The tax reform is a mindset change. It's a mindset change of let's deconstruct all that confusion that was created over the years, one on top of the other, to a simpler system where VAT is a transactional, simple tax like it is everywhere. I was in Japan in May. We don't even have a VAT area in Japan. There is no VAT problems in Japan. It's 10% on net price, period. That's simple. It's simple. Here in Brazil, like Kieran mentioned, I'm mentioning, we have created a convoluted system that involves logistics, that involves commercial pricing, that involves everything just to comply with these taxes, just to calculate the taxes right, just to compete. So logistics today is crazy. Companies have consumer market companies with their corresponding, let's say, retailers that are the clients of these consumer market companies. They fight or they negotiate logistics. It's a battle of who opens up more distribution centers to be more tax effective. So today, there are thousands and thousands of distribution centers in Brazil that exist only for tax purposes. And because of the complexity. With that change, what we will see is the new system, it will bring simplicity. It will actually help São Paulo. São Paulo, by the way, recently did a very smart move. They started taking products out of ICMS ST. They're not going to request ST anymore for some products. They will make it extinct. That's a good move from an investment perspective. The message they're saying is, don't wait to come to São Paulo for the reform to come into force. I'm going to get the prepayment out, which is a major problem, a major issue in tax accumulation. Come now. So that's very interesting. So what's going to happen is the logistic cost will be reduced, whereas the tax system, the new tax system is put into force, okay? So this balance will happen. Companies will lose tax incentives, yes, but at the same time, they need to do an effort to identify the hundreds and thousands of costs and logistic incremental costs that they have taken over the years, because from an operational perspective, it made more sense to have a huge tax incentive hitting the P&L, but they would take on logistics, operational costs that they didn't need purely from a business perspective, to give rise to that larger tax incentive. So this is a very interesting mindset change. It's a very interesting change management effort that companies need to undertake, right, Kieran?
Yeah, exactly. And I mean, we're seeing these discussions about these companies who have, who are buying products, they're moving them across the country, like thousands of kilometers of transport, moving them there, storing them in a different state, and then moving them back to the market that's actually going to consume those goods. Just a huge amount of logistic cost, as well as keeping the product. I mean, some of these products are perishable, like they've got sell by dates on them, and you're keeping them, you're transporting them around. You got the cost, the shelf life is being shortened. There's a lot of complexity to get at the current, the current tax structure that is there currently. And now these companies are looking to the future, and they're discussing these huge simplifications. We don't need that storage area like in other states anymore. Let's focus on the end customer, and let's start making business decisions as to how we're going to operate.
Yeah, that's the beauty of the reform. That's the beauty of the reform. So the last slide, which is the next one, it's really, I guess, what are the value drivers of the reform? It's really about simplification, okay? As Kieran mentioned, it's a reduced cost just to comply. Today, tax areas in Brazil, some companies, they have 50, 60 people in the tax area in Brazil. And when you compare to their global tax department, sometimes it's like 30% of the global tax department is personnel in Brazil, whereas the Brazilian operation is like 1%, 2% of the overall business from a revenue perspective. Reduction of litigation and controversy, that will make investments much easier, much more predictable. Okay. And again, Brazil joins a more global VAT model. That's very important. It's in line with what's happening with transfer pricing, with Pillar 2 and other major changes we are having. And that's the positive message out of this, let's say, initial statement that we're making. There is a great potential to really unleash value, to open up space for new business models. Business people, entrepreneurs, they sometimes they're held back to do something new because of tax problems. I have seen businesses fail because of ICMS ST, for example, because of accumulation of ICMS ST. That was they designed 2-3 possibilities for new business for operational models that couldn't work because the operational costs were much higher, and the business was killed. Again, that's why it's a mindset change, because all the business community in Brazil, we have been dug into this for so many years, for so much time, that now we need to kind of look at the horizon and kind of see it, that the simplification will help us a lot. We have the transition to tackle, which will bring some extra complexity, but there is an oasis of opportunity after that, and the concept of bringing simplicity and unleashing value and more GDP is there, right? It's a pillar in this tax reform, and everybody was targeting at that when this was implemented or started being implemented. Kieran, you want to make a point?
Yeah, no, I was just going to start. I have a list of questions here for you, but it's and I guess taking the opportunity, and I think this is we're on the last slide here, so
exactly,
maybe just taking the opportunity to talk about some of the issues around that. I mean, could you give us some put in perspective for us the importance of this change in taxes in Brazil, because like a lot of people, as you said, like a lot of people have certain mindsets, been working with Brazil a long time. You talked about the talked about the compliance costs, the risks related to it. Like, can you put this change in perspective for us?
Sure, Kieran. Yes, I mean, we have been paying consumption taxes in Brazil for many years. I mean, we have VATs in Brazil for more than 100 years, 120 years. It started out from one state to the other when they were to sell products 100 years ago. Brazil used to have an export tax from one state to the other because the state of origin wanted to keep some revenue out of that, some collection. That may be the cause, for example, of why we have ICMS being paid today at origin and destination, okay? So this historically has been a very easy way to collect because it's on a transactional basis, okay? So the government relies a lot on VAT taxes to collect, especially cities and states. The federal government really saw an opportunity to increase collections back, I believe, 20 years ago, maybe, yes, with PIS and Cofins. They took PIS and Cofins, and even PIS and Cofins, I mean, when you translate PIS and Cofins literally, it's a social contribution for a program of inclusivity or for federal workers. Has nothing to do nowadays with a social contribution. So even the name can be misleading. PIS and Cofins were converted to VAT taxes, okay? 20 years ago, they bumped up the rate. They created a convoluted system of credits, but the federal government joined the consumption collection train at that time. And that gave rise to a high increase of tax, and which today is about what, 35-36% of our GDP is what we collect overall in taxes, overall, okay? And it has been increasing year over year. PIS and Cofins, of course, was one of the major drivers for this increase, is one of the major drivers for contingencies in litigation. And consumption taxes out of this overall collections in Brazil is about 52%. So governments like consumption taxes. We like VAT taxation in Brazil, as opposed to income tax, social security, which is also high, but it's there. So that's the perspective. And the whole system of collection was created around that. We have been trying to do the tax reform for 30 years now. This was a major win to be able to sit down and say, we collectively agree that the system is a blocker of investment, is a blocker of growth to Brazil. So the target was set, which is dual VAT. One is going to be managed by the federal government. The other one is going to be managed by the states and cities. Okay, so that's why it's a dual VAT, but they should be seen together, added up at the destination. And they have, of course, studied and analyzed, let's say, effective VAT systems around the world for implementation. So we have the target, we have the vision, we have the current setup. In the middle, we have the transition. The transition was created in a way to make the change less hurtful, for example, to companies that have set up shop in places that are far away from their consumer audience, to their consumers. So the transition is long for a reason, to make the change smoother, right? Because again, the mindset today is extremely driven to taxes being in the driver's seat and pricing, commercial, procurement, logistics, sometimes sitting on the side and not really driving the business decisions at all, right? When you look into deals, same thing. I mean, taxes, they are major deal breakers. So we have the target, we have the current setup. The transition is the test, is the period we must go through to change our mindsets. Again, CEO, CFO, commercial officers, logistics, everybody is going to design how their businesses are going to be impacted, because some of the key elements that today they have, for example, VAT tax incentives, that will go away. That's a key driver for profitability. That needs to be changed for something else. Pricing, how can you remain competitive? Who do you buy from? Where do you buy from? So all those major items will need to be reevaluated during this transition. Otherwise, businesses may not survive. At the same time, companies need to look at what new business models or opportunities do I have when I start operating in a different setup of taxes. Again, 28%. Today, the effective VAT taxation for most companies, it's around that number. So it's a big number, okay? And there's no transparency to customers. That's another point that's going to happen. Customers don't own, they don't understand how much tax there are in products and items at all, okay? It's not transparent. I heard that in Japan, Kieran, that the VAT tax in Japan used to be 8%, 8. When they increased the VAT rate to 10%, the government collapsed at the time because the people were not happy with an increase from 8 to 10%. Here in Brazil, because prices are inclusive of tax, you don't necessarily see it like you see it in the US with the sales tax that adds on top. Brazil already has something like 25-30% of tax in everything we buy, okay? Don't be mistaken. And that's a major source of pricing, business decisions, and economics to hit profitability, okay? So that's the level of change that companies will have to go through as they become more transparent, as the tax that they will pay is going to be fully disclosed, okay? And the flow is going to be seamless with less leakage. But again, it's a mindset change. That's what it means for businesses, for companies, for investors, okay? New investors, especially permanent investment into Brazil, they have an advantage because they will come in without having to deconstruct everything, right? They may want to come in with a new setup in mind, okay? Of course, looking at the transition, but that's the aim as well.
And Bruno, in the past, I remember many difficult conversations with foreigners trying to explain this consumption tax system in Brazil. And I guess, would you describe the new system as being similar to that in other countries now? It's going to be easier to explain this new system?
Definitely, Kieran. Definitely. First of all, the tax base, we have had major issue with how to calculate the tax is a problem in Brazil, right? As you understand, as you know, we had the ICMS in the tax base of the PIS and Cofins discussion that companies recovered millions, billions of reais of in tax litigations that taxpayers won back in 2019. So that's not going to be open for debate. It's going to be the net price. Net price, as it is elsewhere, is going to be the tax base. So no debate on that. Very simple. That's a major win, okay? And the fact that we're going to have two and that the taxation is going to be at the destination, the fact that the flow will be seamless. ICMS ST, I wrote about this the other day, talking to an investor, a permanent investor setting up shop in Brazil, about 60-70% of my consumer base is in São Paulo, is in the Southeast, in general, Rio, Minas. Why do I need to organize myself in in distribution centers here, there, or have a factory in the north of Minas, etc., instead of here and there. Why just can't I go to São Paulo and, out of there, operate and distribute my excess or my inventory to the other states and pay the tax there, of course, keeping collections in those states because it's going to be on the destination. But why? I mean, and that was because two reasons. ICMS ST, as I mentioned, that's that prepayment of ICMS that São Paulo has historically used, and apparently they're dropping early, and that's good. Major source of problems. And I wrote and I told them, ICMS ST is like kryptonite to Superman. Okay, so ST, guys, is like kryptonite to investors. And São Paulo, I don't know, they heard the message and they're starting to take that away. They started with a major list of products that they took it out, and apparently they're going to extend the list to remove those from ICMS ST. And the other thing is VAT tax incentives. They're there. They were validated over the years. They're still relevant. Don't get me wrong, because the ICMS reduction only starts in 29. Okay, so when you do capex investments, when you do planning, the other thing is, okay, the transition is long, so the tax incentives are there. They are relevant. Again, they make a difference on price setting. They make a difference on profitability. So you need to run the numbers. But since the ICMS only starts dropping in 29 to 32, there is still, let's say, shelf life to using tax incentives, VAT tax incentives, but be careful because they will go away. Okay, and then the new system kicks in, and like you said, Kieran, very similar to how other countries operate. And the whole idea is deconstruct the system to make it simple, put the business in the driver's seat. Tax will be transactional. Tax will be ideally not a major issue, not a driver of decisions, not a driver of profitability for the business. It's going to be more like a consequence than actually what drives all these complex setups that were created over time.
And when you mentioned some good news for investors in São Paulo, that they're doing away with the ICMS substitution tax, the ICMS ST. What other impacts do you see for investors?
First of all, new business models, especially in the online, the gaming, stream, all types of online services that Brazil has been a major source of new investments, for example. Everything digital tends to benefit from the reform. And why is that? Because, again, product and services will be seamless in terms of credits and debits with the new system. Okay, so whatever you buy that's physical that comes with ICMS will be creditable. And of course, the fact that Brazil has major problems with accumulation of taxes. So PIS and Cofins, one of its regimes is a cumulative PIS and Cofins. Okay, ISS, which is a service tax on a municipal level, it's a dreadful tax because it's cumulative. And that I have seen that halt business models, for example. So service aggregators, so companies that buy and sell services, buy and resell services, maybe not in 1 or 2 layers, maybe 3 layers. If you want to be an aggregator of services in Brazil, you have to understand that for every layer you add, you're going to have 5% of ISS, the service tax, that's not creditable. We kind of don't see it today. I mean, we are in the problem, but if you look from above, and if you talk to investors and to companies from outside of Brazil that look into Brazil that say, oh my gosh, this is crazy, then you start to understand the level of value that we are keeping back in Brazil. So everything digital tends to gain a lot, Kieran, with the reform, because it's going to be a seamless system. No more accumulation of ISS. You can aggregate service. You can be more creative in the sense of designing business model in an all digital world, much better now than before. Okay. Just as an example, okay, all these internet companies historically, they have had issues defining if they're subject to ICMS or ISS. That's kind of basic, right? So they were discussing whether, oh, this is municipal, city, or state, because ICMS is on telecom, and whether what they do is telecom or not. So I mean, that's going to go away to a much more streamlined, simpler, direct system. That's very beneficial, okay, as we forecast.
So you've talked about the benefits from a logistics standpoint. I guess the benefits for the, I guess, digital operations. Are there any other benefits that you wanted to point out?
Sure. I mean, logistics, actually, it's the benefit for the business, of course. For the logistic companies, it's they have to redraw the map on how they operate. Okay. So Brazilian logistic companies nowadays, they have like 100 people in their tax department. They're very, very smart doing taxes, but now they have to go back and really understand the value that logistics will provide. So it's a revamping of logistics, reduction of costs, reduction of logistic costs to companies. I would say that we have this major open area for new business models, as I mentioned, for digital. Another great, let's say, change and impact is manufacturing in general will have an effective rate reduction, overall. We need to analyze sector by sector, of course, okay, Kieran? But in theory, if you do valuations, for example, of manufacturing companies, they tend to be better off following the reform. Of course, we need to see and understand the level of dependency they have on tax incentives, depending on the structure and the setup that they have put together over the years. Because sometimes the tax incentives, they are a major revenue that comes in to offset the VAT cost. So their effective rate may be lower. But in theory, manufacturing companies should see that happening. Manufacturing companies, usually, they're the ones that accumulate a lot of credits and they don't get back. So like I said, there are many companies today with a lot of tax credits in the balance sheet as a recoverable, as an asset, that mechanism will change, okay? So there is a positive gain for manufacturing. Service companies, on the other hand, will be challenged, okay, with a higher effective rate in general. If they don't get, there will be some reductions, okay? The 27, 28 targeted rate will be the full rate, but some sectors will have some reductions of 60, 40%, even some exemptions out of the system. So there is simplicity. It's not going to be like Japan simple, you know, but we're going to have some different layers of reductions as well. But again, the target is very good. Manufacturing should come out better off with good gains here in profitability, in more simplification on how they operate. We see that happening as well.
And you've talked a lot about the benefits, and I think you just touched there on maybe the a higher tax rate for service companies. But could you tell us some of the other downsides as to this change that's happening?
Sure. A major downside is the long transition. The long transition and the fact that, of course, we have the backbone of the reform designed, but we still, I mean, there is room for changes, okay? there's still room for maybe changes to happen over the next years. So one of the downsides of, I mean, if the system were to be implemented today with a dual VAT, with a rate of 27, 28, predictable, again, it's high, very high, right? Highest in the world, but predictable on net price, etc. It would be great. So the downsides is the transition is complex, the transition is long. Companies will have to deal with their accumulated tax credits, and they will recover them over extended periods of time, okay, 240 months, etc., for ICMS. So there are some downsides to the reform, which are actually, I would say, they are somewhat the cost of deconstructing what was built and what was running. That's why it's long. To make space to the new system. So that's I would say the downside of it from a implementation perspective. Some sectors will be benefited, some sectors will be hurt. For them, it's a downside for the ones that are hurt more. But the reform overall is positive. The transition is challenging, the implementation and changes that may come or not, and some doubts that are still open. For example, getting refunds of accumulated credits within 60, 90 days is essential for this to function well, okay? So this is a major concern of companies in Brazil, is to get refunds back, because that's a major problem today, and we need to fix it. So I would say that the major downsides or issues are really during the transition in the next, let's say, 7 years, leading to January 1st, 2033.
And Bruno, focusing on like what's immediately in front of us and the initial impact on invoices in January 2026. So we've understood that. What I understand is that if these new invoices don't have this information on them in the required format, that these companies may not be able to invoice. Like what are potential implications for a company, for its suppliers, for its clients, if they're not able to meet these requirements for the new invoices?
Oh yeah, then Kieran, Brazil, one of the good things about having a very complex VAT system is that Brazil has developed, both the tax authorities and the taxpayers by consequence, they have developed a very keen and developed and sophisticated tax technology landscape, okay? So everything tax technology in Brazil is very sophisticated. So companies need to be sophisticated to issue invoices, to receive invoices and get credits, etc. So that's a good point that we have. Other countries don't, okay? That was a major issue in India, for example. Their major issue was electronic tax invoicing and all of the migration to a digital invoicing system, etc., that Brazil doesn't have. We live in complexity, and only technology can solve it today. Operate a business with that amount of invoicing and fields to complete from a tax perspective and returns to file. So the invoicing is fundamental. Without placing the new fields that the government requires to do the statistical analysis of the impact of IBS, CBS on companies, on the economy in general, if a company is not able to implement that by January 1st, 26, they won't be able to issue invoices, okay? Because it's how the electronic system works. The invoice is not going to be approved. It's going to be stuck in the approval process. So again, this is a major milestone. Companies need to be prepared. They're working very hard with their ERP systems, tax engines, and tax technology. Companies with us as well to get ready for that. But again, we expect that to be one more thing to do from a tax technology perspective in a system that already requires a lot from tax technology and is delivered.
And I mean, you mentioned here that it seems hard to imagine that we have a tax rule which may impede companies from issuing invoices, because if they don't issue invoices, they don't receive money, and then the whole value chain doesn't work. And then because of this new requirement in January 2026, are you seeing a rush of companies trying to adapt their invoicing systems and then a potential lack of specialists in this area compared to the demand? Because we're talking about like all of the companies around Brazil subject to these new rules.
May I complement that,
Sure,
Bruno?
Paulo.
Kieran's question. I mean, what happens to smaller companies? Yes, big companies are all sophisticated, have all of this, but even smaller companies and your corner grocery shop. I mean, how are they going to do it?
Paulo, in theory, they should already be doing it, because everything is already electronic for 20 years now with the so-called SPED system of compliance. So, of course, with POS devices connected to invoicing systems, even smaller stores and retails, in theory, they should be already doing electronic invoicing in both sides, purchases and sales. Here, I mean, again, it's one more step to add the IBS and the CBS statistical information to an invoice that's already electronic, that they already should be issuing, and that already has interconnection with the government and a collection of taxes, the current taxes as they have today. So, and going to Kieran's point, the issue is not really to implement a change, because companies are used to implementing tax technology changes all the time, because of an ever-changing system that we have with new rules. But I guess it's a rush that's happening for companies to adapt and to get resources to help them create that. So, for example, a small retail, if they buy a system from a small ERP provider, or a company that has a bakery management system with invoice issuance, I mean, this IT company should be able to help them out with those changes, as they have for any other changes that would have happened in the last years, rate changes and so forth. For larger companies, of course, that's a major change, because they have to calculate the new tax, they have to put the new rates there. So they need to do it on their own, kind of, and make sure that it really matches their specificities, their businesses. So that's why they need to hire technology companies, ERP providers to help them with the change, consultants like us as well. But is the rush, especially for the larger companies, to adapt, and the need for resources which are short.
And it's interesting, Paulo, as well, what we've seen in the last, in the last weeks now is that companies are actually having meetings with their suppliers and with their customers to make sure that everybody's ready for this change, because of the dramatic impact that it could have. Because if suppliers can't issue invoices, you're not going to receive the product. They can't deliver the product, so they're not going to get the cash. So it's like there's a lot of discussion going on within the supply chain of these companies.
Yeah, cynically, from a cynical point of view, you may think that this is a government program to stimulate demand. I mean, the cost of this, what do you think, could be like 0.5 percentage point of GDP or something? I mean, it must be a significant amount of spending that every business in Brazil must be doing towards the end of this year to meet with this compliance. I mean, it'd be interesting to find out if statistically one can capture the cost of what this thing is.
Yeah.
No, true.
Yeah. I haven't seen an analysis for the costs of the adoption of the invoicing systems for the end of the year? Because there's a number of different ways I think that companies are doing this, and which are more or less complex. But maybe Bruno, you could talk to that, and also talk about the other, which are even bigger changes that are coming in the future with that timeline that you showed us.
No, sure. And yes, Paulo, you're correct. I mean, just to adapt, it's part of the cost of compliance. It was like this with SPED 20 years ago when companies were moved into electronic filing, electronic invoicing, and all of that. It was mandated in a similar way that's being mandated now. And the shortage of support really drives prices and costs higher as well. But yeah, a huge demand happening now for resources, ERPs, because companies are really scared. Good point, Kieran. Not just on what they are going to issue, which is their revenue, but on their supplier side. And this is interesting with the reform as well, connecting, Kieran, with the other aspect. Companies need to work very closely with their procurement areas to really understand the profile of their suppliers. Because now, since everything is going to be creditable, okay? Everything is going to be creditable. Everything you buy is going to give you credits. Things in the past that you were not really concerned about because they were not creditable. They were not connected to the business. They were not core. They were not subject to ICMS, etc. Out of the complexity. What we see as well, Kieran, as another upside is when you look at the supplier side, you want to really get them to issue the invoice as well, because you can only claim the credit if the invoice is issued. You can only get the product and get the supply chain going if that invoice is issued. So they're starting to be more, let's say, concerned and do some third-party checking on suppliers in a much broader sense as well because of the reform. But then on the supplier side, there's a huge opportunity for companies in general, is that what we see with the tax reform is a broadening of credits that companies will be able to claim. So for example, a company that does a lot of events and that hires, for example, travel, T&E, travel and expense, or they hire travel agencies, they hire companies that do events. Today, they don't claim credits on certain types of expenses, tickets and events. In the future, with the new reform, though everything is going to be creditable. So you want those suppliers to issue invoices to you, of course, connecting your taxpayer ID number. So there will be major changes in processes related to suppliers and to procurement that we don't see today. That's something we have also been advising clients to really take full advantage of the reform. One of the key areas is the procurement side, understanding suppliers, driving the process on the supplier and how they issue invoices to you, so you can claim full credits on everything timely, on everything you buy from them. And that goes into another point, Kieran, real quick, which is that split payment discussion. It's very famous now. Everybody's talking about it. It's a system where when the customer pays the supplier, if the supplier did not collect the tax at the time the customer will make payment in a B2B transaction, the money will actually be routed directly to the government. So the money is not going to flow, 100% of the money is not going to flow to the supplier, and then the supplier is going to pay the tax. No. With the split payment system that's being idealized and potentially created, if the tax has not been collected by the supplier at the time of payment by the customer in a B2B transaction, that money will be routed directly to the government's coffers without passing through the supplier. This will make space, it will guarantee collections and reduce tax evasion. It's a development, it's an enhancement from a system that Mexico Mexico has a very simple VAT system, okay? It's 16% VAT, all federal, but they created a cash basis regime for debits and credits, and that makes it very complex. Brazil studied that. They wanted to do something that's not ST, which is a prepayment, that's not cash basis, and the split payment may be an option, but that will give rise to a very complex clearinghouse type of software approach that will bring banks and payment institutions to the game to really make sure that this split payment functions well. Okay, to be seen how that's going to work, but that's also a major, let's say, source of concern on the new system, Kieran. But again, it's going to be part of the game to guarantee that collections will happen. And if you're paying your supplier, to guarantee that your supplier is paying the tax. If they didn't pay it, the money is going to be routed directly to the government coffers from your account when you make the payment. That's an interesting. Let's see how that's going to work out.
Yeah, but I'm going to try to be a bit quicker here on the, like we're arriving close to the end here. We've got a lot of questions still, so maybe you could tell us briefly about some of the other aspects. For example, the cash flow aspects. How is this going to change the cash flow in companies? For example, just thinking about the tax payments themselves.
Sure. Depends on the business, but what we see out there, Kieran, is many companies, especially manufacturing, they have deferral on ICMS, which is the state VAT, especially on imports. That's going to end. So in projects that we are doing with some companies, what we have identified is the need for much more cash available upfront to pay for imports and to pay for taxes on imports, actually, that currently are deferred. That's a situation that happens, okay? Just by what I explained earlier, cash is probably going to be needed on a much quicker basis now, because if you are the supplier of someone, that client of yours, that B2B client of yours, they will demand that you collect the tax, because if you don't collect the tax, they will not be able to claim the credit. So that type of pressure will come. So it's going to be very difficult or impossible not to pay the tax without your client, your customer complaining about it because they want to claim the credit. It's going to be different from today, because today, if the company just reports how much the tax is, the other party claims the credit, and then if you collect or not, you're going to be assessed, and you're going to have an infraction on you as a supplier, but the other company claimed the credit, and the system keeps going. But again, we foresee, in general, a much higher need for cash available in the new system. On the other hand, because the system will be seamless and cash refunds are being promised to happen on a quicker way, we see a lot of cash being unleashed today. We have clients and companies that have billions of reais in their assets accounts of tax recoverables that they go to the government. It takes 3-4 years to get the money back. So in that sense, that accumulation should not happen with the new system. So net, and of course, this will depend on the specifics of each business, but there will be more need for cash on a lot of businesses, but then we may see some cash being unleashed and released quicker than today in other business, especially manufacturing.
And Bruno, can you go into some more detail in terms of the impact in industries? Because I think
Sure.
You mentioned like the logistics industry could have major challenges because the companies don't need as much logistic support. You talked about the increase in the taxes and service industry. Maybe just kind of like give us some more details on the industry impacts.
Sure. Let me give some quick highlights on, let's say, pharma. Pharma, we are foreseeing greater profitability in the end because they will claim more credits than they do today. We are foreseeing more need for cash, okay, to pay up front. for imports because it's highly reliant on imported API. And we foresee, let's say, effective rates actually being a little bit lower than it is today in general. Okay, so it's positive outlook. Transportation and logistics, it's a business challenge. Their business is going to be challenged because they're not going to be spread out like they are today, right? Distribution will change, so they really need to focus on what's really important. They need to focus on pricing strategies on their side. What drives value beyond tax, tax incentives for them, which is a major thing that they offer their clients nowadays. So the tax reform hits their business straight up front, right? Consumer goods, along with retail, okay, they go together. I would say it's a better outlook because it's going to be a simpler setup with much less leakage of tax. Both retail and consumer goods, they accumulate a lot of ICMS, ST, ICMS credits, PIS and Cofins credits. That's going to be a benefit, okay, for consumer goods in general. With the ICMS ST going away, the downside is that they will lose tax incentives. So the major challenge that these companies will have is, as I lose tax incentives, which is a profit, which is an income hit in the P&L today, and as I lose this, how can I compensate it, and how can I keep my pricing exercises, in the competitive situation, balanced? That's how I see. I mean, the other industrial manufacturing, also positive. Services, we have a higher effective rate, but they will be able to claim more credits, and they will be able to be more creative on business models. So that's a quick highlight. Financial services, of course, still to be seen here, the impacts. But again, there will be transactional taxes on spread and margins, but no major changes here. The VAT is mostly on services and manufacturing outside of non-financials. Agriculture, agribusiness, they were able to maintain some reductions and some exemptions of VAT, which was good. So we don't expect major changes there as well. We need to keep an eye on potential changes, however, during the transition. But that's a quick highlight on some of the industries, some of the sectors, Kieran, that we foresee here. We have about 150 projects going on in multiple industries to help companies migrate and transition with the reform.
And whenever you look at this from a holistic point of view, from a business standpoint, I mean, are we talking about potential changes across the board, like to costs, prices, competition, logistics? Can tell us a bit about the holistic impact of this?
Sure. This is a top CEO agenda and board. We are having discussions. Everybody's concerned because this changes the business rationale. It's a business change. It's a tax reform, okay, but it's a major business change for any company because, like you said, it will impact pricing. It's a competitive situation. Companies that are existing, they were built, they adapted over the years to get a little bit of more tax incentive here, to get that distribution center there. So they built that structure over time, and now they have to decompose. They have to go back to basics without in a dynamic way. In a dynamic way, meaning the transition will take 7 years. Every year is a different battle. To compete, to understand what's going on in the market, to get the pricing right, to get the cost reductions right, to get the upsides right, and especially get their teams ready. Change management is the name of the game. It's part of the risk matrix. Now, tax reform is in the risk matrix of any company that's really looking at this in a very serious way, because it will change the economics of any business, for the good or for the bad. And of course, the companies that are better prepared, they will get an advantage. And Kieran, you're in the middle here. You're negotiating with suppliers and with clients. There is a delta, there is a margin, an arbitrage. Because of the tax change, there is an arbitrage on the taxes that your supplier pays, whether it's creditable or not creditable, what happens to them with the reform. Your clients, what happens to them? Do they credit what you pay or not? There is an arbitrage of suppliers and clients that you need to be aware. That may be the difference of surviving or not. That may be the difference of being more profitable or being less profitable or running a loss. So that's why this is a top CEO agenda, commercial, everybody concerned. We bring all this team together. When we do the tax reform project, it's not just calculating rates and technical things. We are actually putting the CEO, we are putting the commercial teams, supply, procurement, legal, logistics, okay? Even HR is involved. Benefits to employees now are going to be taxed by VAT. I mean, there are major changes to how fringe benefits are going to happen. So this is a business change, and there is a lot of arbitrage on how you apply this to you, how you interact and negotiate with your customers, with your suppliers, to get ready for this, right? So this is, in sum, that's what we see, and why this is a CEO board level topic currently, okay?
And I think you mentioned that it's potentially the end of tax incentives such as ICMS, which have drawn companies to have factories in different states across Brazil. And there's various types of incentives, related to various regions, and even on income taxes, even on municipality taxes. And could this mean that then some business may no longer be viable as a result of the tax reform?
Yes, that's a major concern. That's partially why the transition is long, is to make sure that all that capex that was invested in places that are in theory operationally ineffective but tax effective because of incentives, is to give time for them maybe to migrate or to amortize, depreciate that investment. That's why it's long. However, there's also going to be a fund that will be granted and financed to companies that will be able to get some funding back from the government because of lost tax incentives. So that will give them some breathing room after 32, 33, some more time. But in the end, after the full effect of the reform, as it is in full force without tax incentives, one definitely would look at an investment opportunity, and they would not have the VAT tax incentive in mind to be located, or that incentive to be located there. So states will need to be creative. States will need to understand what their value drivers are, and they will try to foster businesses with other types of things, but not reducing VAT taxes, which eventually created, back in the day, a VAT tax war, and kind of drove everybody's collections a little lower. And that's the point here, Kieran. Of course, Northeast, they have a very important income tax incentive, which gets their tax rate from 34 nominal to something like 15%, 15.25. Okay, so there are other elements besides VAT that could help these states keep their relevance and regain investments, and identify what their value drivers are, what are their areas of vocation for new investors. But yeah, it's back to basics and back to normal, I would say, Kieran. Again, deconstruct the convoluted system that drove us to this mindset that's being recreated now to drive the country forward, leveraging from good examples and that we see outside of Brazil very easily here around the world. Okay.
Yeah, and maybe can you tell us about some of the other issues? I know there's a lot of discussion with those companies, for example, that have large ICMS credits, that they're actually, because they could lose, they could lose a lot of value if they're not able to utilize these credits by 2032. I've seen these companies looking at actually creating new transactions to consume these credits. Can you tell us something about that?
Sure. Yeah, PIS and Cofins credits, they are going to be migrated into CBS credits in 27. So the second milestone, right, which is the CBS and the extinction of PIS and Cofins, that's a good point from a federal perspective. What's really concerning is the ICMS situation with the credits for ICMS. The government, at least at the backbone of how the reform is going to be, companies will be able to offset ICMS credits. They will receive the credit in 240 months. Okay, so it's a very long time period to get the ICMS credits back once it kicks in, starting 29. But you're right. Today, the companies that have a lot of credits, they don't want their credits to go into that type of extended time frame. And what they're really trying to do is expedite ECREDAC in São Paulo to recover ICMS ST, requests for refund. That are available, getting the credits validated to sell to other taxpayers in states that's permissible. Or eventually, Kieran, like you said, find ways or identify transactions in an effective way within their business that they're able to utilize the credits quicker in order for them not to go into that, let's say, catch-all 240 months rule that has been set in the backbone of the reform. But you're right. I mean, there is like a rush for optimizing validation, usage of ICMS and PIS and Cofins credits as well, prior to the full migration of the system.
And I guess from a financial reporting standpoint, we've seen this discussion is now entering into these discussions of it's hitting these valuations, it's impacting deals like M&A, it's impacting discussions about the profitability for this year, the closing accounts for this year, potential impairments. Can you tell us a bit about that?
No, yeah, on the M&A front, and I've been involved in some discussions, both on both on greenfield concession type of investments and also acquisitions. The first part is the valuation itself. Of course, when you put the tax element, and the tax element is relevant, the VAT going forward to calculate profitability. The fact that some companies, they may have large amounts of assets sitting on their balance sheets that these credits that will be recovered in a very long time frame. I mean, that whole debacle is extremely important and impacts valuation. Projecting, from a discounted cash flow perspective, projecting profitability is very difficult during the transition period, as you can imagine, right? The next, let's say, 8-10 years. There are some assumptions that need to be made, of course. But after that is more of a easier way to calculate. Different sectors will have different impacts and different complexities, but what we are seeing is from a deals perspective, it's making life a little more difficult now because of the transition and then the years ahead, which are the more short midterm. And valuations can be more complex when you start discussing how to value these credits, how to calculate profitability of the business with the reform, what you're going to lose, what you're going to win. Those questions are being asked as we speak.
Yeah, and I think like you mentioned, the overall move here is a huge positive move to leave this legacy system that created this old mindset that took the focus away from business. And with this, I guess, any final comments in terms of suggestions, recommendations for companies in terms of the way they're looking at this?
Definitely, yes. I mean, you put it very well, Kieran. That's what's happening, right? We're giving away that old system. The transition is tough. The transition is not going to be an easy task to do, especially because every year is kind of different in a way. There are many moving parts. There are many minds to be changed within the company, not just the tax teams, but the other teams as well. So everybody needs to be together in this to work as a change to put a change management type of effort in place and bring the different areas of companies. That's what actually we are doing and helping out. And the recommendation is start early. Again, the system issue is the first milestone, should be ready. If not, call us, we can help. But the second milestone and the third, which is the PIS and Cofins being extinct, and then the ICMS and ISS gradually going away, and the IBS increasing 29 to 32, you need to get ready. You need to start doing scenario planning on potential impacts. You need to understand P&L impacts to the business. You need to understand numerically what's going to happen, okay? We have been doing that a lot. But most importantly, you need to bring the teams, and I mean C-level, board. You need to put everybody on the same page to really understand what are the potential impacts and value drivers and risk items of your business specifically. Okay, that's the major recommendation. So mapping that out is essential. Mapping risks, mapping upsides, where you should focus on, and you can only do that by convincing CEO, C-level, board, and then involving procurement, commercial, legal, logistics, supply chain, right? /supply chain, FP&A, even, right? The financial functions, everybody together from the business, from the company, to really understand that there will be major impacts and that there will be arbitrage on the negotiation. That's why legal is important, commercial is important, procurement is important, to get the upsides in negotiations and to understand the risks you may have as well.
And just when I heard a lot as well about the discussions, but commercial discussions, and some commercial discussions have been based on gross price, and there's a whole like behind this is a whole discussion of contractual terms, and with the focus on contractual terms and what this means for relationships. But thank you very much, Bruno. I was just checking here. I don't think we have any questions. So maybe I'm not sure if anyone else has any questions or at this time, or if we'll just wrap it up there.
No, I just wanted to thank you. I mean, this was excellent, Bruno and Kieran. It's really a very complex process, but very positive, and clearly something that is very much tied to the longer term perspective of the Brazilian economy. I mean, what I come away was this not being a specialist, is that really, I mean, when people say that you could gain 1 or 2 percentage points of potential GDP from this reform, a lot of it comes from what you say, Bruno, the change in mindset, but also from this, it will force this exercise of all the major firms in Brazil to rethink their business purpose and find a lot of inefficiencies, find a lot of opportunities that they hadn't seen before. And maybe that's where you will kick in what economists call the total factor productivity gain. That is, that you can mix the existing resources you have in a better way and increase productivity. So it promises a lot. And I thank you very much. This was really excellent, and we learned a lot.
Thank you, Paulo. And that's really the punchline: reinventing business and the mindset here, following that. Thank you, and thank you for the Brazilian American Chamber as well for the opportunity. Glad to be here again with you.
Okay, bye.
Thanks very much.
Bye, everyone.